Have you been worrying about how to raise funds for your business? What if I tell you that you can start and grow your business without spending a dime of your money or breaking the bank? You don't even need a loan. There are at least 3 different avenues you can explore to get any amount you desire to kickstart your business idea. So, where do you get the capital? How do you go about it? What are the requirements? And is there a guarantee they will fund your business? All these concerns will be addressed soon. Ensure you watch this video to the end, as you will learn a step-by-step guide on how to maximize all these opportunities. Do not skip any part, as a simple mistake can ruin the entire process. Remember, there are thousands of vibrant entrepreneurs out there trying to get those funds as well. But with all that I will be sharing in this video, you can stand out and start your business immediately. So let's get started. Number 1. Seed funding. Just as the name implies, seed funding typically represents the first official money or capital that an entrepreneur raises to finance his or her idea. It often comes in at the early stage of a business. If you want to finance your business through this means, you need to have a well-established business idea, strategically mapped out and creative enough to convince people to be willing to invest in it. Another major thing to note is seed funding can be likened to startup capital, money used to finance a new business, not an already existing one. It is usually gotten from potential investors who are willing to invest in this new business in exchange for equity stakes, which entails partial ownership of the business. In this case, when the business eventually grows and starts making a profit, the investor can easily sell his own shares. Seed funding helps finance the very first steps of your business, such as market research, product development, equipment purchasing, hiring a team of professionals to help, if needed, getting a business license, and lots more. So, how do you go about it or get the funds? So many people can help at this stage. They could be your friends, family, incubators, venture capital firms, and others. We also have investors who participate in seed funding. They are often referred to as angel investor. Unlike venture firms, angel investors can easily fund your startup even without any previous track record. They are willing to take the risk. So what do? Carefully carry out an investigation on the investor market and try to locate investors or venture firms that specialize in your area of business operation. This can have a significant impact on your partnership and the size of funds. Also, ensure to have a creative business plan, the necessary documentation containing all the precise information needed, and bank details readily available. Be prepared for a thorough interview and be convincing enough with your prospects. All these are the essential factors that will motivate potential financiers of your business idea. With your homework well done, you can easily raise anywhere from $10,000 up to $2 million for your business, using every possible avenue in this method. Just before venturing into seed funding, you must weigh your chances to know how beneficial or risky the process might be for your business. A few downsides of seed funding. The process of raising capital for a new business can be so overwhelming due to the level of competition in the market. As a result of this, investors tend to look out for the most creative business ideas that will be beneficial to them if they should invest. If your business plan does not present the ability to provide potential returns on investment, no potential investor will be willing to invest in it. It can also be difficult to stand out among other applicants if you are not able to articulate your business's competitive advantages or growth potential clearly. Also, in some cases, you are often obliged to give up a portion of your ownership, equity, in exchange for seed investment, which can have long-term implications for your new business. Another thing you must not neglect is the pressure that comes with it. There is always the pressure to meet the expectations of investors, grow quickly, and meet aggressive targets, which can lead to burnout and challenges for the business owner. Nevertheless, it can be what you need to bring your dream to reality. Why? Because investors are willing to take the risk. Generally, when it comes to investing, there are risks involved. One very important advantage of seed funding is that investors are willing to risk investing in a business that is barely functioning with little to no assurance of a positive outcome. Likewise, it is debt-free. In cases where you're willing to part with a certain percentage of your company's stocks in exchange for an investment, then you've got no cause to worry about debt. This is more like a trade-by-barter scenario where no one owes the second party. It also does not involve monthly fees or interest. There's also the possibility of experiencing fast business growth. Seed funding gives entrepreneurs the encouragement and financial boost needed for accelerated growth and expansion. Before I share the next method of how you can raise funds for your business, I know many of you gonna like this approach. If you are yet to subscribe to the channel, please do, and also give the video a like. Thanks. Another great way to raise capital is through crowdfunding. If seed funding is not for you, equity crowdfunding can be a viable alternative. It offers startups an opportunity to raise capital without giving up equity or control of their company. It can also assist entrepreneurs in testing their business concept and building a community of supporters who are invested in their success. Unlike seed funding, where a large sum of money is gotten from an investor or a group of investors in form of investment, here, funds are obtained from a large crowd, usually through online platforms, in little amounts. It's not just limited to a new business. You can use this method to finance an already existing one or a project. There are quite a lot of positive sides to crowdfunding, but the notable ones are: it's a fast and easy way to finance your business. You see, crowdfunding for business is not just popular, but a growing market. In fact, according to Business News, the global crowdfunding market is expected to be worth more than $5.5 billion by 2030. Now, imagine you presenting a business idea before the huge public. It is sure a fast way to raise funds to finance your business or project. Of course, not everyone will be convinced or willing to put funds in, but a great number of people will. In this case, you don't need to meet people one-on-one, trying to convince them of the possibility of your business succeeding. Once you can access a platform, you can address millions of people at once, which goes a long way to saving time. Also, no credit check is required. Unlike traditional loans, crowdfunding platforms do not need your credit history or collateral. This is good for anyone who does not have a long operating history or a good credit score. However, you must take note of the negative sides of crowdfunding to avoid endangering your business. Crowdfunding your business doesn't mean sitting back and receiving free money. There are also some stress and pressure attached. If, by any chance, your business or project turns out not to succeed, its reputation will be at risk of being damaged, and people who have pledged money to you will be forced to withdraw. On another side, if you eventually did not meet your fundraising goal, some crowdfunding platforms commonly require businesses to return all funds to previous donors. Your business concept could be stolen. Creating a crowdfunding platform also entails publicizing your company in its early phases. A business that has not copyrighted or patented its idea stands the danger of having it stolen. If an imitator beats you to the market, you may end up losing your dreams. How to successfully secure funds through crowdfunding? With the number of business ideas springing forth every day from several people aside from you, so you must do everything possible to beat the crowd. Start by interacting with family and friends about your project to know if they are willing to invest in it. If they are not willing, there's a high possibility that the unknown crowd might not find it interesting as well. Aside from that, try to get feedback from different people to know their views about your project. This way, you can use such ideas to improve. Carry out intensive research on ideas similar to yours from others, and leverage their ideas to get tips that will help you spice up your online awareness. However, be careful not to copy someone else's work as yours. There is an unknown famous quote that says, "Most giving is 80% emotion and 20% rational, and the best way to get to someone's emotions is to tell a story." Keep this in mind when using this method. You've got to tell a story that captivates, compels, and moves their bank cards. Lastly, you can finance your business with venture capital funds. Venture capital is a form of private equity and a type of financing that investors provide to startup companies and small businesses that are believed to have long-term growth potential. These funds are typically from well-known investors, investment banks, and other financial institutions. Also, venture capital doesn't necessarily always have to be money. Sometimes, it comes as managerial or technical expertise in exchange for a large share of company equity. How do you go about it? Firstly, you need to have a good business plan. Your business plan should be creative and appealing enough to convince investors and, of course, achievable. It should also contain additional descriptions of the management team, market analysis, and competitors. Carefully review and make sure your project has a suitable growth potential and possible strategies to stay above the market competition. After that, you must carefully select your investors. Carry out thorough research on potential investors before approaching them, and make sure they can offer investments that match your plan. Also, employ the help of a legal practitioner all through the process, one that is experienced in your field and can guide you against possible risks involved in the contracts. A few positive sides to this type of finance include the provision of substantial capital for growth and expansion, especially when you do not have the cash flow to take a loan, plus mentoring guidance and the possibility of creating strong business networks. Of course, when you partner with the rich, you must certainly become rich. However, there are a few downsides as well. Investors often demand a large share of company equity and sometimes immediate returns. This kills creativity, and you might end up losing control over your small business that's just starting out. So, be careful. Now that you have the full details of how to raise capital for your business ideas as an entrepreneur without taking a loan, go start now. To know more about the basic rules of investment and how best to manage your money so as to boost your overall finances, click on the next video on your screen. And if you enjoyed the video, do like, share, and drop a comment down below. Also, don't forget to subscribe to the channel if you are yet to. Thanks for watching. See you in the next video.